Bitcoin, you hear about it everywhere, right? It's this wild asset that seems to create billionaires overnight and starts huge arguments. And right now, we're deep in another one of its legendary price surges. So, let's break it down. What's really fueling this fire?
Just look at that number. As we're recording this, a single Bitcoin is worth, well, a lot. It's been smashing all-time highs, way up in the tens of thousands. A number like that just grabs you, you know? It makes you ask, how on earth did we get here? And maybe more importantly, where is this all headed?
And this quote, it just nails it. Bitcoin isn't just some fringe internet thing anymore. No way! It's gone from a weird hobby for tech nerds to a serious player on the global financial stage. It's not the noisy renegade anymore. It's becoming something people look to when the traditional economy feels a little shaky.
So that's the big question, isn't it? The multi-trillion-dollar question. What's actually driving this crypto gold rush? Is it just a bubble, a massive wave of hype, or is there something more to it, like a real technological revolution? Well, that's exactly what we're going to dig into today. We're going to unpack the forces behind these incredible bull runs.
All right, so to really get your head around the sheer scale of this, we got to go back, way back, to the very beginning, to a time when a Bitcoin's value wasn't measured in dollars, but in pizza. Yeah, you heard me right, pizza. See, this wasn't some fancy trade on an exchange. It was way simpler. It was just a guy, a programmer, who wanted to prove a point, that you could actually use this weird internet money to buy something real, something tangible. And that moment, it became legendary. We now call it Bitcoin Pizza Day.
So what was the price for those two pizzas? 10,000 Bitcoin. A programmer named Laszlo Hanyecz basically said, hey, I'll give 10,000 BTC to anyone who can get 2 large pizzas delivered to my door. Back then, that was worth what? About 41 bucks? Seemed like a fair deal.
Okay, now fast forward to today. Those same 10,000 Bitcoins, they're worth somewhere around $1 billion. It is, and I think we can say this without a doubt, the most expensive pizza order in all of human history. And it just perfectly shows the kind of mind-bending exponential growth we're dealing with here. So how? How do you go from a $41 pizza to $1 billion fortune? Well, it's not just random luck. The answer is actually coded, literally coded, right into Bitcoin's DNA. It's a principle we can call scarcity by design.
And the whole story kicks off with this totally mysterious person, or maybe group of people, known only as Satoshi Nakamoto. Nobody knows who they are, but back in 2008, they dropped this white paper online, laying out a vision for a whole new kind of money. A peer-to-peer electronic cash system that cut out the banks, cut out the governments. And the absolute core of that vision was a system where the supply was predictable and strictly limited.
The key to making this limited supply a reality is a clever mechanism called the halving. Here's a way to think about it. Imagine a gold mine where every 4 years the amount of gold you can dig up is suddenly cut in half. It just gets twice as hard to find. That's basically what the halving is. It's this pre-programmed event that automatically slows down how many new Bitcoins can be created.
Okay, so here are the nuts and bolts. You've got these miners who run powerful computers to secure the network, and for their trouble, they get rewarded with brand new Bitcoin. Simple enough, right? But here's the trick. Every 4 years, like clockwork, that reward gets chopped in half. So the fire hose of new coins entering the market slows to a trickle over time. This creates this built-in scarcity, a kind of deflationary pressure, that in theory makes the coins already out there more valuable.
And it all leads to this, the magic number, 21 million. Because of this halving schedule, there can never, ever be more than 21 million Bitcoin. That's the hard cap, the absolute limit, and that's the whole ballgame. Unlike dollars or euros, which governments can print more of whenever they want, Bitcoin's supply is finite. It's set in stone. That absolute scarcity is the bedrock of its entire value proposition.
Okay, so we've got this blueprint for digital scarcity. Now let's see what happens when you mix that powerful idea with real-world events. You start to see a pattern emerge. These huge, powerful market cycles, what everyone calls the bull runs.
And this isn't a new thing. We've seen this movie before. Back in 2013, there was a banking crisis in Cyprus, and suddenly people were looking for an alternative. Boom, bull run. Then in 2017, you had this insane frenzy over new crypto projects called ICOs. Boom, another bull run. And most recently, in 2020, the pandemic hit and big companies started paying attention. You get the idea.
Every cycle has a different spark that lights the fuse, but that core story of scarcity is always there, waiting.
But something really important has changed over time. If you look back at the 2017 run, it was mostly a retail thing, everyday folks gambling on the next big thing, hoping to get rich quick. The 2020 cycle, though, that was different. That was the arrival of the big players. We started seeing massive corporations putting billions of dollars of their own money into Bitcoin. That was a huge signal that the traditional world of finance was finally starting to take this seriously.
But let's be real for a second. With all this hype about rewards, we have to talk about the risk. Because this history is absolutely littered with insane volatility and catastrophic failures. I mean, just look at the collapse of Mt. Gox back in 2014. This was the exchange. It handled something like 70% of all Bitcoin trades, and then it just imploded. Fortunes were wiped out overnight. It's a pretty brutal reminder of just how wild and dangerous this space can be.
And that brings us right up to today. The market's on another tear, and everyone is asking that classic, maybe dangerous question. Is this time different? So let's take a look. What's new this time around? What are the catalysts that just weren't there before?
Okay, the absolute biggest game changer this cycle? No question. It's the approval of spot Bitcoin ETFs in the US. This was huge. It basically built a super safe, regulated highway for Wall Street money to drive right into Bitcoin. And boy, did it drive. The floodgates just opened. We're talking tens of billions of dollars pouring in through giants like BlackRock and Fidelity. This isn't just a small change, it fundamentally rewired the entire market.
But check this out. Here's a really interesting twist. A recent report from Binance Research dove into who was actually buying these things. And even though they're Wall Street products, a whopping 80% of the early money came from retail investors. Everyday people. It seems like folks were taking their crypto off the traditional exchanges and moving it into these safer, more regulated ETFs. They were looking for protection.
And you can't just look at crypto in a vacuum. What's happening in the broader economy is like throwing gasoline on the fire. Think about it. When the Federal Reserve starts cutting interest rates, money gets cheap. Investors start hunting for bigger returns, and that often leads them to riskier assets, like Bitcoin. Plus, when central banks are pumping cash into the system, a chunk of that new money is bound to find its way into crypto.
So you've got all these things happening at once. You've got Bitcoin's internal code, you've got these historical patterns, and now you have these brand new Wall Street products. So what happens next? Well, right now the market is a total battleground. It's a clash between two really powerful stories, the story of the bulls and the story of the bears. On one side, you have the bulls. They're betting that the big money will keep flowing in through ETFs, that the scarcity from the halving is a sure thing, and that the economic climate will stay favorable. But on the other side, you've got the bears, and they're pointing at the crazy price swings, the constant threat of government regulation, and the chance that a major country could just crack down on it. Honestly, both sides have a really good point. Which brings us right back to where we started. Is Bitcoin just making a lot of noise, or is it actually making history? After more than a decade of these insane highs, crushing lows, and non-stop debate, that one question is still hanging in the air. Has Bitcoin finally earned a permanent spot in the global financial system, or is this whole thing still just a massive, incredibly volatile experiment? The truth is, nobody knows for sure. The answer is being written as we speak.